Morning, everyone. New day, fresh start. Good morning. Good morning. Mic check. Can I get a mic check? For today's show, we're going to have David Dubay joining us. Good morning, everyone. All right, jumping right into the charts this morning. Good morning, everyone. Happy Wednesday. We're going to jump right into the charts. Let's see who we have here. Some comments. Huge gap up this morning on the positive news from the White House. Seems that there's a 2 week ceasefire. President Trump a has agreed to a 2 week ceasefire in military operations, and apparently there's a 10-point plan for this. Although I'm not sure exactly. I mean, I went through a little bit of the 10-point plans. It doesn't look like there are. Doesn't look rock solid to me, but we'll see what happens. In any event, we have oil off 18%, and we're opening up with the ES up 2.5%. So that's a pretty big, sharp move. All right, we're just going to start off by reviewing what we said yesterday. And so recently, the question has been, is the 63.53 low a good tradable low? And we had a thrusty 300-point move off that low. Right here. And since that low, we're now up at 68.34. So we are about 500 handles to the upside, which makes things pretty complicated or very muddy at the very least going into today. But let's let the charts and price action guide the way. First of all, going to start off with on the daily chart and just kind of review the obvious, right? So now with this massive move higher, the ES opening up 178 points to the upside, up 2.5%, over 2.5%. It's reclaimed every trend line that was in question in one move overnight. So we've reclaimed the 200 simple, the 200 exponential, the 50-day moving average, the 50 simple moving average, the 20 moving average, and so on and so forth. Just wanted to dial in here to the weekly chart and just check to see. Yep, we did get over the 20-period moving average on the weekly that was acting as resistance. So now that's behind us. We'll have to keep that 20-period moving average, which is at 67.39 on our radar for a back test. Keep you guys alerted to that as it materializes. But with the EX, that level, that 67.39, and with the EF trading 68.33, we're well above it. So in terms of in terms of moving averages, let's just see if there's anything there that can spring out at us, anything near term that can act as support. These gaps make things pretty difficult, especially on an intraday basis. All right, so in terms of moving averages, there's really not anything close here that we can use as a support. Ultimately, I think we backtest the 50 moving average, and that is down at 67.44. Okay. The other thing to note on the daily that I'm paying attention to is this descending trend channel. It has we can see here on the daily, we had 1, 2, 3, 4 touches. Okay, so that's pretty solid trend line. And what's important to note about that is that descending trend line, if tagged today, would be 68.81. So that's another 50 handles above us. Not sure if we can reach that today, but can't count it out either. I think that if we do get there today, 68. Wait, let's see exactly. I need to get this exact. Okay. Yeah, so it's comes in at 68.83, right? Let's just make it let me just make a note of that. 68.83. Shrink that down a little bit. All right. So that trend line is at 68.83. Now, typically a trend line, a trend channel, a descending trend line in an uptrending market on a fourth touch, I would be expecting that to fail. However, what gives me what makes me think that it's going to hold at least at least momentarily, at least for a short time when we first touch it is it the last touch of that trend line was here, and that was way back on February 25th. Okay, we have this huge amount of basically 2 months of overhead supply where the market just kind of chopped around coming into the new year and couldn't get any decisive footing to the upside nor to the downside. And that kind of makes things messy just a pure technical analysis perspective. All right, so we're going to note that this descending trend line is up there at 68.83, and that our closest moving average that matters would be our 50 period moving average at 67.44. Another thing we have to note is that here on the RSI is really super extended up at 81. Let me just fix this. This should be a 14 period RSI. Yeah, and even on the 14, it's at 81.42. Okay. So let's dial into the hourly chart and see what that if that lends us any clues. Let's start off by first reviewing what we said yesterday. Um, so we were looking for an hourly trend change, right? To change our approach, to flip our approach from selling rips to buying dips. We noted that in order for that hourly trend change to unfold, price needed to breach and stay above 68.80 to 6700. And it's interesting enough that price opened at 66.89. Sorry, so we need a price to get above 66.80 to 6700. Interestingly enough, when price opened yesterday and gapped up, we opened up at 66.89, just above that, and then immediately back tested the settlement, and it was off to the races from there. So it's official. We definitely have an hourly trend change. And interestingly enough, yesterday we were highlighting this head and shoulders pattern. The left shoulder here, right shoulder here, and the head here. And sure enough, we kind of had that measured out, that the measured move on that would be bring us up to, just measure it out exactly, would bring us up to 68.24, and we are now trading 68.31 with the overnight high being up at 68.47. After making the 63.53 look below and fail low, we had a half back pullback of the 300-point move higher, which pulled back to 65.03. And that measured move targeted 68.04. That move is now complete as well. All right. So that's what we said before. Now let's review what we have today. So one thing I want to point out also here is that as a part of this huge 2-month balance that formed up here, we can kind of see that we can see here that we had 1, 2, 3. I mean, those were the main lows that were tradable, right? That's over the course from January well into March. And so we have to think, or at least acknowledge, that there's going to be some overhead supply here, right? And I have that marked out here on the chart in gray so we can keep an eye on that. I find it interesting that price came right to that zone and now has paused. All right, with that said, what do we have for going into today? Well, all our day time frame references that kind of a lot that give us a framing for the day, we've left those behind. So that makes these large gaps makes things a little bit more difficult than a normal day. But with that said, we are now trading above halfback of the move. If we met when we measured out 70.43, the all-time high, down to 63.53, halfback of that move came in at just at 6,700. We are now above that, and we are also above the 61.8, which is at 67.80. So with a gap this big, I think that the first thing we have to know is, let me just check this. Okay, good. I actually have a fade on going from 68.44. All right. So going back into the chart, what do we have for today? So price seems to be respecting. At least it was respecting for a long time, for a couple of hours, since about 4 a.m. It was respecting on the 15-minute. It was respecting the 21 period moving average, and now what we're seeing here is that the 9 period is rolling over and it's kind of pinching into the 21 period moving average, and that comes in at 68.31, and price is just below it. So what do we have in terms of downside references? So typically when we see these big moves, these big gap moves, right? Fed day moves, CPI moves. The initial thrust of the move, you can probably see this better on an hourly chart, just because the extent of the move. But typically what you get is that first pullback, right? So we had the first hour move straight up. The next hour followed through and then kind of put in a top, and then it pulled back where it went into the previous bar. That pullback low comes in at 67.83 half. So I'll be watching that today for any signs of obviously what we're looking for is a gap fill. So I'm going to be looking at that 67.83.50 to act as support, because on a 175 point gapping up over 2.5%, I have to think that a full gap fill is a long shot. So let's take note of that. I'm going to be watching 67.83 half for support. If price gets down there, that'd be a great look below and fail level. If it breaches that low on any pullback and then reclaims it, I'll be getting long on that. Other than that, to note, we have our RSI is pretty extended up here. And you can pick your frame, whether you're using a 5 period or a 14 period, it's no difference. There is a slight divergence in the RSI on the hourly chart. We can see that right here, right, where price is kind of sloping up and the RSI is moving down. So I wouldn't trade off of that signal, but it's just to me it registers that price is maybe losing some momentum up here. All right, let's see if there's any insight from the profile. Where are our single prints? relative to this overnight move. Super extended here. Okay, so interestingly enough, guys, our single prints start right at that pullback low that I mentioned earlier on the hourly that I'd be watching for a trend change. So 67.83 is where our single prints start. And geez, they go down way down to 67.34. So about 50 points of poor structure, very thin structure, poorly auctioned. At some point, we revisit that. I don't think that point is today. However, let's keep 67.83 quarter as a potential level that, if tested, will give us some insight as to what the market is planning to do here. Other than that, we have a support at 68.15. Lines up with a fib cluster. It also lines up with an SPX GEX level. I think that's on my setup sheet. I'm pretty sure because I have an order sitting there. Let's see. It has to be. I wouldn't have an order sitting there if it didn't. Check this out. Yeah. So it's on my stuff. It's my second setup. My support buy 68.11 to 68.15. That might even materialize as they look below and fail. Yeah, it's tough up here. Yep, I like that 67.83, especially if we dip a little bit below it and then reclaim it. That would be nice. I'd be interested in that. Oh shit, where's my hat? I get the trade hat on. Yeah, these gaps are tough. To be honest, like this is a day that it's a day I after I jump off, I doubt I do very much. I'm gonna try to scalp that 67.15. Like maybe see what happens at 67.83. But other than that, that's why I left the order there because I'm not interested in very much. I've just been chopped to death on these big gaps. Trying to get long and get with the trend. It just makes it very difficult. Because let's think about that, right? So if you were short, you got completely hosed overnight, right? You're probably out of your position if you were in futures. If you were in something that didn't trade in the overnight, you're reeling this morning and you're going to cover as soon as the open happens. But you're probably covering right into you're not probably, you're covering right into a supply zone. We have this massive supply zone here that started on basically at the beginning of the year in January. We can see how many touches we had there. And the structure here is just so bad, right? Because we had this rounded top, and no, there are no real. I mean, you can try to pick a support here, but I mean, you'd be probably just guessing at best. The way I framed it out was I went back and checked all these lows, and was mostly looking at the look below and fails, where price spent little to no time below there, and I kind of framed them out like these. Hang on, let me remove this. These were the ones that were really interesting because it was just a straight look below and fail, and price just reclaimed it and left. So that's why I kind of framed it out there. And then I noticed that price was dipping into that area. So All right, so that's what we have this morning. Let's see where our opening print is and get that noted. 68.29 half. Obviously, so we're going to use that opening print as our intraday, bull bear line. But I would expect some profit taking here with the overnight inventory being 100% long. It kind of makes sense that we see a pullback early. And furthermore, on our time study, we're looking for an AM low. So our first pivot today is going to be an early low, sometime between 10:15 and 10:30. So look out for that. I'll post the graphic in the pit now. Where is it? So we have S2L today, series S2L, and today is also a cycle day one. So just be mindful of that. So I'm going to go ahead and that 68.15 order that I had, I'm pulling that because I prefer to be a buyer in that zone 10:15 to 10:45. So I'm going to wait for that window. That kind of also gives me some time to let the open settle. This is a highly emotional open, right? So if you're long, obviously you're very giddy, but if you're short, you're having a bad day. And so these big gaps always tend to be very emotional. So I'd rather just let the first half an hour, even the first hour play out before I decide to participate in anything. Obviously, I'll let the ATAs run, but yeah. And I have one micro short from 66, like 43. That was just a momentum play, and I'm going to cover that soon. I originally had five short, and then I covered those. So all right, watch that 66.15 area for setup number two for support. 66.11 60. Sorry, 68.11 to 68.15. In order for me to buy that, I'd have to cover the micro anyway. So did any of you guys catch the long overnight? I mean, I think if you were at your desk at the open and you bought, I think at any point, if you just held on to it, good job, JB. If you bought and you just held it, you did well. So nice job there. Oh yeah, okay. I'm gonna take a look at that. Like I said, I'm expecting the first move. We have to kind of expect that the first real move will be down here, kind of reset that overnight inventory. This is what makes today a tough read, though, right? Because technically, rule of thumb is go with all gaps, go with all large gaps. But I don't know. It's not the easiest read for sure. Like I said, I'd rather wait, let the first half an hour play out. Oh man, I forgot. I didn't. I failed to reduce the size on this ATA. I did not want to be long. That I did not want to trade that many on this open. I did not want to risk that much. Let me fix that up now. All right, but let me let this play out first. Okay. There's one other level here that kind of stood out to me. Hang on, let me see if I can find it. All right, so far we have. Let me see. Thus far, we've opened at 68.29. Price made a high of 68.36.75. Five contracts traded there. Decent taper up there. Expecting an AM low. Look out for that. Oh shit. All right. I don't know if you guys just heard live squawk. And and I'm wondering now if how the market would interpret any that kind of news, right? So if we ripped 2.5% on the idea of a 2 week ceasefire, if that gets breached, I mean we could be trading 6,600 again in the in one afternoon. We all know that when ES sells, it falls like a brick, right? So hey, watch that 66.15 for support and 67.83 half. Eyes on those for me. Huh. Okay, so see, there's already a ramped up rhetoric going back and forth. And that 10-point plan is kind of, I don't know. It good. It felt kind of, so what was it? A binding U.S. agreement of no aggression, a non-aggression agreement, right? Thanks, Rev. Appreciate that. So the 10-point plan, it was binding. The U.S. has been open straight you and everything they said turn around and bomb. And and if the U.S. agrees to that, I guess he needs to open up to it, right? Well, the point not we wouldn't have been around as much. I'm just looked at point. Iran retains control of the Hormuz Strait, reopening of the strait for safe passage, lifting of all U.S. sanctions on Iran, release of frozen Iranian assets, recognition of Iran's right to enrich uranium, termination of all UN Security Council resolutions against Iran, end to hostilities involving Iran's regional allies. Whoa, Iran is really going for it here, huh? U.S. troops to withdraw from certain regional positions, a permanent end to the war, not just temporary ceasefire. Wow, yeah. So that's Iran. Just Iran has everybody by the balls here because they went out there in a couple of dinghies and dropped a couple of mines and shut shit down. And while you won't find a bigger, a, a bigger U.S. patriot with, I have uh, in my family we have I think it's what, four Marines and two Army colonels. So definitely have people who have served, and just I just wonder why this was necessary. That being said, I was chatting with my cousin, and he's an ex-marine, and we were talking about what a badass move it was to go in there and rescue that pilot. Hey guys, you know what else we should watch? Here, this just stood out to me. So this spike high here at 67.48. That was the spike. What was that? That was some. That was, I, dude. Okay. So yeah, that was when Trump first. That was the first de-escalation tweet from Trump, and that was the first time Iran came out and refuted it. I remember I was long that, and I got lucky and caught the pop. All right, we're trading into that 18 and two. Buying it. Let's. I'm not just rather be cautious here. All right, what do we have here? ETA is short and long. Check. Stop that on that one. And got two scales on that one. So not too bad. Not too bad. All right, right back to the low again. This is why I didn't want to buy that support. I just think that we need to work off that overnight inventory, that 100% long inventory. Plus, we're looking for a low pivot in between that 10:15 to 10:45 time frame. So I want to be mindful of that. I much prefer to be long from that time window, so I don't have to sit through, a 10-point drawdown or whatever the case might be. And that's what. So if you guys know, I use the clock every day to kind of set the cadence of my trades, and I think that's why it's so invaluable. Um, It kind of keeps me sidelined. It gives me a window on when to participate. I've learned to trust it. I've seen it work over and over and over again. And so it I think it's important for us as traders to know our cadence of trades, right? Like when you're trading well, what does that look like in terms of how many trades, or what are the time frames in between wins and losses? How often do you trade on your best days versus your worst days? All that stuff is pretty important to understand. I think that's like I would have to say the nuances, your own personal nuances. All right, that's 68-15 area held really nicely. Hopefully some of you guys caught that. I did not take it. Wait a minute.
Can you hear me? Oh, wait a minute.
Oh, okay, that's the reason. Let me see that. Check. Okay.
Manny cannot hear me. All right, I'm going to reset the audio on
All right, price
all,
rally right up
all
and
the
tested that low
platforms.
volume node at 68.28 and kind of pulled off somewhat.
Hey, can you hear me? No, he must have me off. Okay, JM can hear me. Okay,
Held that level nicely.
Manny must have his audio off. Thanks, JM.
No, David, we cannot hear you.
Um,
Oh, now I got you.
really?
Sorry about that.
Can you hear me now?
Y- I can hear you now. Yep. Sorry
Okay.
about. I had you on red for some reason. I just looked up at the media tree.
Okay. Thank you. Thank you, JB Tom. All right, great.
Thanks for joining the show. Appreciate your being here.
Welcome to my friends to the show that never ends. We just had a couple in the other room before I joined up here. We just had a short play on the 8.4, coming off of 34, 68.34, and we're live on a discount right in the middle here. But we were just kind of opining about kind of look at two-way traffic after this large gap up. It's kind of more consolidating type of rhythms. Hopefully staying above that VWAP area as the initial marker. And that's pretty much it. Not a whole lot beyond that.
Yeah, good read. Same here. I think that as I was telling them that six, I had my setup number two is as long as 68.15, and it was a nice trade. It yielded some. It probably got to what, at least 10. So they're always designed to go 5 and 10. That one worked out pretty in line with that. I just didn't take it because I decided to wait. I wanted to wait for the, how I follow the clock, which I'm one day away from being having all the materials I need to to do the live stream workshop on it. And so I'd rather wait for that 10:15 to 10:45 window to try any longs. So for me, the way it would work, guys, is so say I had that 68.15 setup, right? Okay, so the setup is there, it's not going anywhere, but I want to buy it at a certain time frame. So what I'm gonna do there is I'll still let's see how the level reacts, right? If price bounces at 68.15, then and I missed it because it happened too early, that's fine. I'll wait. I'll catch it. I'll catch the first pullback off that level, or I'll catch a reclaim of the level. But it just my my trades work better when I follow that cadence, that kind of that clock cadence where I'm basically going to trade about 4 to 5 times a day, if that. And so I find that that just is what works for me best. So, yep, this A4 short is working out nicely though. And I was telling the folks here, David, that you know that is the way I manage my kind of discretionary trades, my point and click trades. The setups that I put out, I trade them in that fashion. So it's not just the setup; it's also time applied to it. But I run the ATAs. I run the PTG ATAs outside of that. They kind of run independently of what I'm doing. There's one thing about this Iran situation that we have to be mindful of is obviously I think the news media is going nuts because you don't know who to believe, like what's true and what's not. So, if Iran comes out and says today, oh, Iran, like they just said, Israel bombed Lebanon and we broke the pact. Like, is that real? Does that mean the deal's off? Does that mean we tanked 2.5%? Does that mean crude goes back to 114? I don't know. But also, that also goes to show you, right? The way crude is held up and the way ES held up throughout this mess, it just goes to show you how much the markets trade on perception and news and human behavior, right? Because if it was really priced at if the SPX was really priced at a following, say, a purely mathematical model, we should have been a lot lower. And crude technically should, Rev can speak to that. Crude should have probably been higher, right? I don't know. I'm gonna stop ranting about things that are above my pay grade for sure. All right, back we yeah. That's what I thought, man. Like and Rev, this is something I learned from you was okay, so during when Russia started their Ukraine war, that was the last oil spike. But you pointed it out well in that they closed the fucking strait, and that was like 20% of the world's oil. I would think that that's a stronger move in oil than Russia, the Middle East versus Russia. I don't know. I again above my pay grade. What I do know is that for the last 5 or 6 days, there was, I pointed this out last week on Thursday's stream that the dark pool index was showing buyers on pullbacks. And, those guys move in silence and hard to foresee a resolution. But then when you combine that with Hammer's post about what vol control funds were doing, kind of jives together that there was a lot of selling earlier in the month and then subsequently buying. All right, we got the ATA going here. The A4 is still short. It's short from 68.23. Guys, those signals are on your screen right there. So if you want to follow along, I can't tell you what to do. Actually, I probably should have said that. I have to unplug this. All right, let's take a look at the internals. Forgot to give you guys the internal read. So we're at 2.7 to 1 positive on the NYSE, 8 to 1 positive on the NASDAQ. Whew. Smoking. NQ is smoking. Um, the VIX was down 19%, trading 2089 off that 28 level. Let's take a look at our sector list. Interesting. So our sector list, our weighted AD is negative, guys. That's interesting, right? So look at that. Look at the histogram right here in the lower right. That means that from the open, there are more stocks selling, probably profit taking, early profit taking. I expect this to roll over and change. But we have a clear divergence there from the average to what is printing now. Also, let's point out that we have 1, 2, 3, 4, 5 sectors red. 1, 2, 3, 4, 5, 6 sectors green. That could be noise right now. It's still very early, but it's not the thrusty parties onto the upside kind of read from the internals that you would expect on a 2.5% gap up. Let me just see. I think my audio is busted now again. Shit.
I'm back with you, Manny. If
Okay, good. I wasn't sure.
Yeah, yeah, I had muted you. Sorry about that, but I had muted you
No worries.
uh, because and I didn't want to overstep you. Right. One thing again, for I mentioned this in the other room. just a few minutes while you were talking. But one of the things that on our charts that we look at and we like to do, particularly on a day like today, where the market gaps up, pretty significantly like that, we're trying to find reference points. So one of the things that I use, of course, you get the VWAP here, which is based upon the 24-hour Globex opening, right? Spot, yeah, anchor. But in this case, I anchored the VWAP off of the high. That becomes a better reference point for us this morning. And so the idea here using anchored VWAPs, I don't know how many folks in the pit room, anyways, have utilized anchored VWAPs, but I know everybody in our PTG community does. And again, what that does is just essentially says from that high, anything to the right of it, okay, is relevant in terms of data. All right, anything to left of it is irrelevant at this stage. All right, so from that point, and how does that help us? It helps us in terms of when we get this retracement up here. You can see where the price bounced back up into that VWAP zone and then got a response. So that's the type of trade we're looking for is a bounce back up, kind of into that zone, looking for some resistance and opportunity to establish a trade there. Because what you want to think about it is everybody that's marked off of the high, in terms of, let's say, your shorts or selling, um, that's the area that's their average price collectively. All the prices, all the trades, not necessarily an individual trader, but that is the average price from that high point. So that can be used as a real good reference point for us to say what's the collective weighted price from a specific point. So anchor, and that's one of the ways we like to use the anchored VWAP. You can choose any high, low, or any time of day, etc. But this works really well generically in terms of let's anchor it from a high or anchor it from a key low, and then from that particular point, what's the volume weighted price from that point. So that acts really well for us. So that's something. I mean, yes, we have the VWAP here from the Globex opening, and we can see here on the right hand side it's relatively flat, but that doesn't give us any information from anything that's happened from the high. All right, so this anchored VWAP, and of course you can use multiple anchored VWAPs to formulate a bit stronger picture in terms of price action. But that's something we definitely use. So I don't know if how many people in the pit community there use anchored VWAPs, but we do that in the PTG community. So again, it's just a way of establishing like what's the core weighted price of from this point forward. So it's a very useful tool. I think a lot of people out there in the trading world that I've used for years. One of the things I've used it for is when I was a market maker years back. Let's just say I got an order from a customer right now at 10:04. Well, the weighted price prior to 10:04, my receiving the order is irrelevant for the customer. So one of our core mandates is to meet or beat the VWAP. Okay, so we can't meet or beat the VWAP from the current VWAP. What it actually means is from the receipt of the order, what's the VWAP from that point on? So the idea then, if we received an order right here at 10:04, I would then mark right here, my start of the order. So from this point on, my job is to meet or beat that VWAP, okay, as it unfolds. So it can be used at any time, but that was when I was market maker. But if I wanted to use this high, I could use this high. All right, from that point, if I wanted to use this high up here, So again, you can use whatever you want. But for our purposes, since we're only trading, mainly for ourselves, no customers involved in that regard as a market maker. I just do it from a key high or a low, and I want to see collectively where the weighted price is. And again, what am I anticipating? I'm expecting uh, price to react, or sellers to react off of those, key levels. So that's just kind of a little one of the tools that we use. And today's a good day to use it because of the big gap, and kind of out in the middle of no man's land. So we need to have some sort of a reference point to use. How many in the members area, the PTG room, not rather, I'm sorry, the pit room. I'm going back and forth between two rooms here. How many of you guys in the pit room ever used the anchored VWAP? You just post it up there.
Yeah, so I've definitely heard of it and I've seen it used before. I've actually there's a guy who wrote an entire book on it, and it's something I've been interested in. And I just never had a way of making it. I don't know how to make it work. I think I can do it on Thinkorswim, but I love the I love the concept of that. Right. So where did you anchor your VWAP? Your where did you? I could I've missed that part.
Oh, okay. Yeah. So you can anchor it. The idea of the anchoring is you select the point of anchor, whatever you deem important. How I use it in terms of uh, is as I'm looking for a key high or a key low that I can identify. And so today, where we had the strong gap up, there's, what reference are we going to use? I mean, I always use pivot points, right? For me, it's always, I'm looking for a high or a low pivot somewhere, or pivot zone, right? To identify. So in this case, I'm just identifying the highest high at this stage, and then just anchoring from that point. So yeah, just in case you didn't hear me, was anything, all the trades from that point on, it gets calculated into the weighted VWAP. It's the exact same VWAP if you start from, it's just that you're anchoring it from a specific point. You use it. The idea of using it is if you would just use a regular VWAP, right? I mean, it is a regular VWAP. It's just anchored at a different spot, and so the idea then it becomes, prices return back. We're looking for, a sell. In this case, we're looking for a sell response, right? That's the weighted price. So if you're a seller, if you're an institutional seller, and you started selling it from this, I'll come off these highs. Well, you may not want to sell it all the way down into this area, these areas here. Okay. You may say, I'm going to wait for price to come back to the VWAP, all right, a weighted area. And so if and when it does, then that's when you may want to start re-engaging, right? In terms of buyers, okay, to be able to, to be an aggressive buyer above a declining VWAP, just think of it as a moving average. All right. Another way to just view it, just a core moving average. Right. If a moving average is declining, okay, I'm not really interested in buying it anywhere near that, because there's potentially resistance, because the direction is down. I want to buy it as far away as I possibly can for a move back up into an average. On the same side of using a weighted VWAP, that's the weighted price since that particular anchor. So if you're a buyer, and I'm talking institutional type buyers, right? Not what we're doing necessarily, but we're kind of following the elephants here. So the assumption is, um, sellers are going to be active in and around that zone. So if I'm, trying to establish a potential long for myself, I'm not really interested in establishing along into a declining, sloping weighted price. I want to wait for that weighted price to shift back higher. And then as price goes up and then pulls back to the weighted price, then I'm more interested in buying it. All right. So the flip side here this morning is off that high, we get this, aggressive move down, and then you got kind of the retracement back. Well, where would I be interested in establishing, a directional long or a long lean area? It's going to be somewhere around that VWAP area, the weighted VWAP off the high, because my assumption is sellers that are active are going to be looking in those areas um, to re-engage. Now that doesn't mean they're not active at these lower levels naturally, because we still have some aggressive selling. But in terms of what's the to ask the question, what's the weighted price of all this action since that high, right? And right now it's right here around the 24s, 23s, 24s, right? So right now we're at 14. So if it jumps up 10 handles or so, again, this could be the area where we would be anticipating, a little bit more of a resistant sell response in and around that area. So that's kind of how I use the anchored VWAP, and again, you can anchor it anywhere, but this usually is a good spot. Now you can tell the um, normal VWAP or the regular daily VWAP off the Globex opening on the right hand side. Well, that's pretty flat. Right. So again, that is also used as a reference. Don't get me wrong. That's still a core reference, and that's flat. And so what I was saying earlier is that the market can tend to oscillate around a flat VWAP, and which it's doing right now. So that's one of the ways that I use the VWAP from an anchor perspective.
Great
Right. So
tool, great tool, especially on a day like today.
yeah, I think it can be useful. Again, it's whether you develop a trade strategy against it. To me, it's not about necessarily, okay, we're going to develop a trade strategy against, even though you could, and that's certainly a way to play it. But at the same time, it's more like, I'm always asking, what's the weighted price throughout the entire day? And again, if the market is starting to rally at some point, then I'm going to say, well, what's the weighted price from the low, from that current low? And it can give you a really decent perspective. Now, of course, the idea here also is, let's just let me quickly show you this. I have a few anchored VWAPs here set up, but let me establish another one. Let me do number 13. All right. So here, let me create another one. So now you have two. So one's off the high, one's off this current low. So what does that mean? That means that the weighted price from this low, okay, so all this activity right in here, all right, that's the weighted price. So you can have many, many, different anchored VWAPs that can help you, because maybe you want to know what's the average price, weighted average price here around since this low, right? So that could give you some, insight into the dynamic coming off that coming off that low, all this activity, right? And then of course you got the one from above. So these could merge at some point in the future, right? Which would then again that becomes a potentially different read. But again, they just reference, be able to reference. So I'm always kind of looking for that average price concept, the weighted. It can help keep help give you context.
Yeah, that's what
Right.
I kind of thought. So Bruce F asks, he has Manny on your trade plan today. How do you view it when your continuation long is a and resistance sell are the same? And that's a good eye there, right? So typically when I draft the trade plan, right? the continuation long is my favorite trade because that level is usually the level where, as I've mentioned before, where there's going to be forcing action. It's, if you look at the level just purely from your chart, you may not see anything, but typically there is a technical level there. Above that level is where I think there's gonna be forcing action, and so there are some days you'll see that I would say 80% of days it's just a continuation long, but on the other 20%, that continuation long is also a resistance sell. And the reason for that is on those days, on those 20% days, I think that I'm not sure that, like on today, a huge gap up, I'm not sure that the market is going to make it over that level. And so at that point, uh, and also there's probably not enough volume to force over it from what I can tell from the profile on the SPX option stuff. So on that day, I'm okay taking a short there first because I typically the continuation long level is going to fade on the first touch. And I'm looking to trade the reclaim of that level. But on days that I don't think that level is going to, that level could easily become a resistance like today, I'm okay with taking that trade as a short, and for me that would be a valid trade on that day. Hopefully that answers that. Yeah, that continuation long is my favorite setup because it has the highest win rate because it's typically you're going with as opposed to like selling a resistance or buying a support initially at the at the entry. The yeah, at the entry with with a resistance or a support buy, at the point of entry it's kind of trend, right? Even on a micro time frame. So that's why I like the continuation long so much. And it's, like I'll sit and I'll wait for that trade all day long. Oftentimes too, that trade, what will happen, and I'll draft that level before like the overnight high or overnight low or the overnight high is formed, and often you'll see that as the overnight high. And what that and on those occasions when I drafted the level, that overnight high, that was the first touch fade, and then um so that, and then it being thinner liquidity overnight, the move probably marked the high for that movement. And so yeah, I find that like I find it super interesting. Like I've started when I was really when I was really getting that setup nailed down, I started seeing that pattern over and over again where I would draft the setup and then that would end up being the overnight high prior to it forming. All right, let's take a look at the internals. We have 2.9 to 1 positive on the NYSE, 7.8 to 1 positive on the NASDAQ, holding up quite well. I find it interesting that the VIX is kind of creeping up higher, but that kind of makes sense with what the ES has going on here and just the heightened tensions, geopolitical tensions. We also have that backwardation that I keep talking about, where the front month VIX is priced higher than the back month VIX, and once that flips, and it's probably it, let me check it. It's probably flipped now. Where we flip from a backwardation to a contango, from some market jargon for people that are into that kind of stuff. just get the back month VIX here. Yeah. Okay. Good. So we are now official. It's an official contango now. So we're front month VIX. Gosh, they're right at parity. They're right at parity right now. Just a few minutes ago, there. Yeah, there it goes. So, oh shit. Yeah, I can't. You can't even talk. You can call it. There's about 3 minutes. It's too late. Yeah, I would have to set still backward. And it kind of makes sense too. All that's going on. The intraday option stuff, and versus the end of day. So here, maybe let me show you that. The option stuff here. These calls built up. This line right here, and move to 620. So short, and you need to be short below that. And that means all these guys right here, all of these guys, and they're getting liquid and going on. It's a long way off that 25, 6, yeah, 56, 25. So keep that on your radar.
So just on this side here, in the PG room, just going back and forth. We're just sitting on our hands at this stage. There's not really a lot trades on the board. Well, right now, uh, I don't know a lot range trades. I just pulled the opening range chart over. Um, so we do have opening range trades to get that on its opening. We are open short on both ES and NQ. The 5 minute opening range trade. No target yet, so we're just sitting and waiting on those. But other than that, not a whole lot. So a lot of movement overnight, quick movement
Yeah.
overnight, but really just the way we treat it is the same every day. That the market is, up 200, 300 handles, whatever it may be, or down. We just treat it the same way. Let the market find its levels. Market's going to trade. We're going to look for the same setups over and over again. Somewhat boring, um, but structural and disciplined. So you're just going to do the same thing every day, and that's the beauty of intraday trading. I don't have to worry about overnight exposure or anything. Just wait for the
Yeah, that's an interesting point, David, because I, it, I I I kind of can draw a line in my trading career from when I used to think, and that kind of tied into all the emotions, right? The FOMO, the the revenge trading, and then there was a time that trading became of all those emotional roller coaster days. And it's only in hindsight when I think about that I say to myself, "Oh, okay, this is what I used to read about often, that good trading is boring," and I'll take that. I'll take that any day over the roller coasters. I went through, I don't know what, 5 years of roller coasters. Or more time in your day, you're not doing much.
Well, think about it. I mean, take any sports, right? I mean, you're a baseball coach, right? And so forth. I mean, yes, you want to be excited about playing the game, and so forth. I mean, I think fans are more excited emotionally than the players, and for good reason, naturally. But if you're a player, or a coach, yes, really, what each player has to focus on is not, you know, uh, they focus. They have to focus on the job.
Yeah,
What they're doing becomes business. It's a business mindset. It's a process mindset. Right. So you're not thinking about the excitement. you- You're in the excitement. You're part of that excitement, but your mindset within that is you're focusing on the job at hand,
right.
right? So same thing with trading. We could be very much excited and enthusiastic about trading and the dynamics of trading and everything that's that effectively moves price as it does. But really, from a spectator standpoint, yeah, let's get super excited. But from a player standpoint, right, as a trader trading your own, right? Yes, the enthusiasm is there, but you really have to now focus on, uh, um, a good trading day. I don't get super excited. I'm not like jumping up and down. That, oh, I made a few $1,000s today, or I had a windfall day and I made a big score. All right, because I don't get excited. and people say, "Geez, why wouldn't you get excited?" The reason why you don't want to get excited, and I don't get excited, is because I know, and so you don't want to have that emotional roller coaster. You want to be really stable. It's just business. Again, if you have a day, execute. Yeah, you followed your plan. You did everything you were supposed to do. You Bragging is a banana. Yeah, I've always said, I'm not braggadocious. There are people out there, community of braggadocious people. Good for them. All right, but doesn't interest me. I mean, again, you can just get, you know, uh, you can get cold cocked real easily if you get, over your ski. Days you do a job well, and you feel good about it. I mean, there's satisfaction, and then there are days where you don't do you assess your performance and say, okay, well, I'm not gonna criticize myself so hard, but rather just say, okay, let's come back tomorrow with a new resolve, right? But you got to stay focused, and so yeah, so getting excited about it like sports event doesn't not as it's business, and again, have satisfaction in the process and what you're doing, and again, you could do the process all day right and come away with a negative P&L and say, geez, I traded my ass off and I traded really well, but yeah, pay, walk away and say, had a good day, you know.
Yep. My best days. I'll turn around. I ended up. It happened. Got out, and I see it later on. I'm like, oh, that's a better than average day. But like, I don't know. It just doesn't. The ups and downs of it, I don't get excited anymore. There's nothing there for me. Like I said, with analysis, the devising of the plan, executing that plan, and now lately, being able to do that analysis with you. That's I want to make sure that review these that what I'm saying makes. I've spoken to David about it often, or a few times a week, time review, and we can talk about, hey, what kind of been doing his thing, and I wanted to get, I wanted to present an analysis that anyone could follow, and with material that everyone that's going to be known to everyone, instead of presenting an analysis from my trade plan. So if you guys realize, I'll put out my trade plan, but what I frame in the morning is just using daytime frame references and something that pretty much everybody has on their charts and can follow along with it. And that also makes sense, right? Keeping you guys on, keep us all in the market. My job. That's the way I see it. And I want to be good at that.
I think another point to this is um, I think those that are really up their game, or I never did when I was you know young in the business. Of course, I did work for the investment banks and so forth, but but really, and all that in the early days, like I didn't view the person I was working for as okay, he's gonna give me type trades, and I'm gonna have my success, look it through his eyes. I want to see how he analyzes price action, right? And yes, in the context of that, trades will be developed and strategies will be formulated. But everything his eyes. How teach me how to view, versus just giving me on the screw tube. You know who they are. They just want to copy somebody else's trading. But okay, they may have some short-term success with that, right? Pass a few evaluations here and there, but when they really get down to it, they don't have the skills needed to have long-term success. Short-term success is available to anybody, but it's the long-term success, and in doing so, it's learning a skill that you can take forward for years, and then you don't need anybody. You have enough, in those skills to, continue on. You know,
I
so
don't know how do
that's what I try to convey with my stuff is, yeah, we have some trades, but
David. I think it's something. Oh, for I don't think I first of all, I think I would probably be insulted. Like, okay, why would I just? Why would you think you could say that to me and I would follow it?
yeah,
I just I don't I had a long time where signals calling services and kind of do it yourself.
no, I've never been. PTG has never been a signal calling service at all. You know, and you weed those people out. People that come in, and it's not what they expect because they're expecting something. Like, oh, okay, he's been in the business, X number of years, and he's going to give me some real juicy trades. Not going to be the case. If you stake around and you observe how you know people that have been with experience,